Hey everyone, welcome to this brand new episode of Phoenix. In today's episode, we have Karen, and she's the founder of Infinite Giving. They recently raised a $2 million seed round. We're going to get into that. But before we do, Karen, how do you feel about that raise?
Hey, I always feel good, right? The more runway you can have to build a great company, the better.
Absolutely, absolutely. And can you tell us a little bit about, your life before you started this startup? What did you do? How did you even branch out into the world of startups?
Ooh, great question. I have an indirect journey towards startup life. I always love Sheryl Sandberg wrote a book called Lean In, and in it she talks about how careers used to be ladders. And some still are, right? But most like, hey, you get in there and then you would go rung by rung by rung. And if you're lucky, you retire one day. And she kind of introduced the concept that ladders are out and jungle gyms are in, especially when you're in the tech ecosystem. And that just means, hey, you're going up and down and left and right and kind of exploring and innovating and entering into different open doors, or you're opening the doors to explore and with the idea that eventually you're finding what you were made to build. And that I love that analogy because it's very much the story of my life. Is that it's definitely a jungle gym, and so I have founded a nonprofit. So I was an executive director and founder of a nonprofit that worked in East Africa.
Wow.
Did that for many years. So was fundraising, right, building the board, filing for my tax exempt status, and then really several years in, experienced a lot of scarcity mindset and burnout. One of my largest donors introduced me to someone named David Cummings, which here in the Atlanta, Georgia tech ecosystem, he's a pretty well-known tech founder and venture capitalist now, but he was running a marketing automation called Pardot. And I was a good
Yeah.
nonprofit leader, which meant I had no idea what technology was, and I was Googling marketing automation, and didn't know what it was, but it was one of those things that, the company had a great reputation. I love to explore things that I don't know, and wanted to become really good at something different. So I passed the work I was doing over to a different organization, still serve on their board today. They are bigger and better what I would have grown it into. So really proud to help and support cooler projects. But from there, entered into a career, was originally created to make their corporate social responsibility program, but it got me into the tech world. Long story short, David sold Pardot about 3 months later for $100 million. It was one of the
Wow.
largest bootstrapped SaaS acquisitions on record at the time.
That's huge.
Yeah, right? If we all could have those stories, that
Yeah.
would be exciting. And he turned around and purchased a building in Atlanta, which was actually a really gnarly 1986 unrenovated building with a big vision of creating it into one of America's largest tech hubs.
Wow.
And he said, "Karen, do you wanna come do this?" And I was like, "Great, I don't know much about commercial real estate or tech ecosystem building, but I also didn't know much about corporate, social responsibility programs." But I knew that I wanted to use Jim Collins, right? Good to great in the back. It's like, hey, I wanted to be on that bus. I wasn't sure which seat I fit in best, but that was a bus that I wanted to get on. So I said yes, and I built roughly an almost 10-year career in the tech ecosystem. I ended up being vice president of Atlanta Tech Village, which is one of America's fourth largest tech hubs. So lots of density, lots of money raised. And then I got into venture capital and was really passionate about having more underrepresented founders getting exposed to good deal flow and bringing those opportunities. And in that process, I continue to get really frustrated with venture capital of why more underrepresented founders weren't getting equitable opportunities. And I was like, you know what? I could do this. I've a high and right, you always want to make decisions based on, or at least for me, I like to make really thoughtful decisions based on when I'm looking back and hopefully get to live a long, gray-haired life. And I look back and, I'm 80. The question that I always ask myself is, would I regret not going for it? And for me, I was like, I would absolutely regret not trying to start a tech company and solving problems that I think I could solve. So with the blessing of the VC firm and Atlanta Tech Village, I ended up doing a lot of customer discovery and exploring and spent about a year and a half trying to figure out what problem am I uniquely situated to solve.
Hmm.
And went down several different paths and then eventually essentially landed on infinite giving. Because in that tech 10-year career in tech and venture capital, I also started serving on a lot of boards.
Wow.
So I serve on, board of trustees for higher ed. I serve on small boards where we're just building like a reserve fund for the nonprofit. And so Infinite Giving was born out of my exposure to investing and tech, in addition to my experience as a board member and, of course, as an executive director and a fundraiser. So it feels like this is my jungle gym of where all of that experience kind of came together, and I've landed on the company that I was meant to build.
That's an amazing journey. Thank you so much for taking us back in time. And when you were 10 years old, can you describe the way that you were in this world? Like, how were you interacting with your surroundings? What were your ambitions back then? Did you even imagine that one day you're going to be running a tech company?
No. I was not. I mean, when with the beauty of hindsight, there's certain things that now you look to pattern match, and I'm like, yes, I operate within rules when I understand and agree with them, right? And I was always looking to like I did the lemonade stands and I started sitters club and like I was always searching for started working at a very young age. Always really liked to kind of control my own destiny. But I always also had a heart of service and like how do we do these things in ways that can help others? But yeah, I think particularly as a woman, and it's different for everybody, but I think I was exposed a little bit less to the idea that I think many men are exposed to, where it's like, "Oh, yeah, not only should you work in the company, you should own the company, you should start the company." And so I didn't really see that. Even growing up, like, I never had a female boss in my whole professional life. It was always men, and that's okay, like, I was comfortable with that, but it was something that when you take a step back, you're like, "Why didn't I think about doing this earlier?" Instead, even when I started the nonprofit, I was doing work and I was like, "Oh, I see a problem that I can solve. Let's go solve that." Versus like, "Oh, I can create my own destiny and I'm gonna do this great big company." It's like it was a much more granular, gradual process that I think, again, on the jungle gym, if you're just like, "Hey, I'm open, I wanna solve, I wanna help," then if you have the mind of an entrepreneur and then have those tendencies, I think that that tells you right there kinda a little bit about who I am, that it was always looking for problems that I could solve. And that looked a lot of different ways. I didn't think it would end up leading a financial technology company, but here we are.
Absolutely, absolutely. Wow. And do you remember at what point did that entrepreneurial fire started and you could feel like something triggered you in your life to go ahead and just, jump, take the leap and sacrifice everything and start building?
Yeah. I mean, when I was in the tech ecosystem, right, I was the vice president of Atlanta Tech Village, and we had probably roughly 300 startups. And I was serving them and helping them. And eventually I started advising them. And then I started running accelerator programs where we were teaching all these core. So by the time I actually started the company and I was doing deal flow, right, when I got into VC, I felt like I had an unfair advantage, but a well earned decade long advantage of kind of being on the other side of that. And then for me, it was just looking at all of these entrepreneurs and just thinking, why am I not doing that? I am just as capable as they are. It's just like sometimes when you're not exposed to it, it's like, oh, they're on a pedestal. You only see the good bits and you think it's less attainable. But when you actually walk with founders, right, there are some unique attributes that founders have, and not everyone is meant to be one. But the reality is, we're just people, right, working to solve problems in unique ways. And I think as you reframe that, it becomes more attainable. And then you're like, "Ah, it's not that I can't solve it, it's which problem do I want to choose to solve and spend the next 7 to 10 years, creating and building into."
That's amazing. That's absolutely amazing. And I fully agree with you. We're looking at founders or those that run huge tech companies. At the end of the day, they're humans just like us. But
Yes.
of course, their mindset could be very different. Like literally, their threshold for stress or even risk is just leaps and bounds ahead of what one can imagine.
Yes.
Do you agree with yeah? And
Absolutely,
yeah,
because when you think about it, like, A, you have to have resilience, and even being on the tech ecosystem side and the venture side, when you cross over to the founder side, the emotional roller coaster ride of the highs are really, really high and the lows are really low. Probably that actual impact is what surprised me the most. Cause like you hear about it and you know about it and you support people through it. But then when you're experiencing it, like some days you're a genius and some days you feel like a failure, right?
exactly. Yeah.
It's that ride of like you just push through and you have to be so strongly convinced of what you're bringing and building and creating to serve the world, that it keeps that drive going. So, yeah, I think just grit and determination and resilience are a huge defining factor of what makes a successful founder.
I couldn't agree more, Karen. It's crazy what you're saying. It's the absolute truth out there. And also, you mentioned that you started this nonprofit in Africa. Could you give us just a little bit of backdrop? Like, how did that even come about?
Sure. Again, the jungle gym. I don't always share this piece of my career path, but I actually have a master's as a marriage and family therapist.
Oh wow,
And out of that, I ended up doing consulting and industrial psych. So, doing a lot of executive coaching, team building, 360s, things like that. And I ended up working with a founder who was doing the consulting, and then the organizational consulting actually funded the start of a coffee company. And that coffee company was sourcing coffee beans from Rwanda. And so even though I
oh
was
my
doing
God,
executive coaching industrial psych, that was then kind of funding the coffee company. And I was like, ooh, I can help over here too. And I started doing marketing and different things over there. And then I had the opportunity to just continue to grow with kind of legs on both sides of those houses. And I ended up spending a lot of time in Rwanda. And I was like, man, coffee is bringing sustainability to some of these villages, like fair trade. We're doing all of this really great work. But as you love and live with a community, you start to realize, like, hey, this is helping this section of people, but how about all those others who don't own land and can't grow coffee? And so that's where I was like, "Hey, I can start a nonprofit to come alongside these communities." So we built a school, we built orphan care. So a lot of it was more crisis management, but still community led by them. So we would essentially enter the communities. It was called the Do Good Initiative. And we would say, "What problems can we help and come alongside you to solve?" And then with their guidance, they would identify and we'd work with the local communities on funding different projects that they requested.
that's so beautiful, Karen. Like a lot of people live on a life that is rather templated, right? Like you went out of that frame. Like literally, you broke every rule. Um, you went to a country that, if you look at documentaries, it could be a little bit scary. Yet you established yourself there. And what was your why? What was your motivation to keep going there?
I love adventure. I don't wanna live a boring life, and so I feel like there's a lot of value in saying yes. There's, of course, a lot of value in saying no and choosing your yeses wisely, but, I think I've always had an adventurous spirit. I love to travel. When I was little growing up, people were like, "What do you wanna be?" And I used to wanna be like a National Geographic photographer, like, that was my dream. And so I think travel and then just with that idea again, if you pull the thread through of like, oh, I wanted to help and I saw problems that I thought we could solve. And along with the just a love for adventure, I think those things together made it a really easy choice for me to say, oh, wait, we could help. We could do this. But yes, other people not, knit together the way I am would be like, and I had people that are like, "What are you doing? You're going over there for how long and why? And that sounds really hard." And I would be like, "Yeah, I think it is going to be hard," which for me is exciting, right? Like challenges are exciting because it gives you the opportunity to grow.
This is again super, super beautiful and golden what you're saying. I guess a lot of people don't understand that you need to step out of that comfort zone, right? And that's what you did. And this is where you found a huge comfort. And it's even more comfortable than within the comfort zone, which is crazy, right?
Yeah, you take that moment and you're like, "All right, imagine yourself forward," right? Ideally, we're all hopefully lucky enough to be 80 years old, and we're sitting back. I don't know, and there actually is research around this as well, but if you're looking back, will you regress? What would your regrets be, right? And I think often living a life of just full comfort is not gonna create the memories or the impact or the legacy that you wanna create.
Just dropping gold nonstop. This is absolute truth. Absolute truth. And can you tell us? So, for the people that don't necessarily know what your startup does, like if you just break it down in layman terms, like what is the problem and what is the solution offered by the platform?
Yeah, Infinite Giving is a financial technology platform built to serve growing nonprofits, so tax-exempt entities here in the US. And the problem that we're solving is that the financial system, at least here in the US, is not made to serve tax-exempt entities. When you are a retail or business client, brokerage accounts, banking, all of these things come really easy. There's a lot of things available to you. The minute you become tax exempt, rightfully so, it introduces a lot of complexities around that. And even here in the US, the, banking system was created more than 100 years before the first
Yeah.
tax-exempt entity even existed. Something like a brokerage account for you and I individually that we can go online and do it in 20 minutes. When you're a nonprofit, it's wet ink, it's paper, it's a 9 to 12 week process. And then you sweep accounts, FDIC sweep accounts, that's ensuring your deposits. Right? That's very common for businesses. When you're a nonprofit, those are not offered to you. The best rates are not offered to you. Adding or taking somebody off an account is not offered to you. It's very, very difficult. And so when you're in the nonprofit world, you just learn how to operate around all of these problems because you are operating within a system that was not made for you. And that's just like the status quo, and that's where we have lived as a financial, industry serving tax-exempt entities. So Infinite Giving is disrupting that by creating a platform and a firm where we can come alongside these organizations in a fiduciary role, but we provide them one place made for them that can help them receive donations, manage those donations, and grow those donations.
Yeah, and thanks for breaking this down. It's yeah, definitely an amazing tech for a very dinosaurish industry,
Yeah.
right?
And the next thing that people always say is they're like, "But nonprofits don't have any money." And I'm
Mm.
like, "Well, you don't come from the nonprofit world." So here, at least in the US, it's a $2 trillion market.
Oof.
And then when you look at it's very top heavy, right? You have a lot of Harvards and Stanfords, you have a lot of higher ed, right? Because these big endowments. But even when you kind of take the top heavy organizations off and you're looking at tax exempt entities who have 25 million and under in securities and savings, that still makes up a $550 billion market that
It's
is
huge.
underserved, that the finances have not been disrupted, access has not been modernized. And so for me, it was a very clear problem, and I'm like, "Oh, but I understand this because I've opened the banks, and I've been the fundraiser and the executive director, and also I've sat on boards." And I'm like, "Why can't you get the rate? We have this rate with our company. Why don't you get that rate?" And it's not accessible. And so really deeply understanding the problem that you're solving, and I've had that experience on all sides of that, also allows us to kind of meet our customers and say, "Hey, we've been you, we understand you, and here's the way we've created all of these different tech solutions and financial opportunities that are gonna make your life better and easier and more streamlined."
Yeah, absolutely. And do you remember like what moment made you go nonprofits seriously need more modern tools for managing their treasury?
A lot of it is I also was, like, just in the status quo when I was running the nonprofit. I was just like, "Oh, yes," and then even a 10-year career in tech, you're seeing all this innovation around it, but then on boards, I was just, like, living in that frustration, and then when I was like, "Actually, I'm gonna solve a problem," and I started to do a lot of customer discovery, I kept going back to, I have a deep love and experience in this sector. And then, when you're doing research and discovery, it was like, why is no one else solving this? Like, what am I missing? Like, there's got to be a reason that no one has disrupted this yet when you have all of this tech and all of this innovation, and people were finding different ways to solve different problems, but no one was doing it from the financial side, the reserve side, the investment side, and no one was doing it in a holistic way. Especially, right, in our industry, you have financial experts and you have nonprofit leaders, and typically they don't understand each other. And so I think it was a part of that discovery process. And then also just realizing that there were reasons why no one was solving it. A is because big banks, right? And like, is that really who you want to go up against? I like challenges. So the answer is yes for me, right? And it was also that there is a big kind of gap in understanding for those outside the nonprofit world how inequitable a lot of the financial practices actually are. VCs and business folks don't understand that. Nonprofit leaders do. So a lot of it was exposing kind of that opportunity as well and how big that market really is.
Yeah, but how did you test it? Like that they would actually be using such an advanced platform, like for example, because I know that you have a way to. I think there's like crypto and stocks management and that stuff. Like this is advanced stuff for nonprofits. How did you even kind of test the waters to see if it would vibe with them?
There's a lot of research out there already that just is, and nonprofits tend to be about 10 years behind in like tech and platforms. And so there's already a lot of research. It's like, hey, here's opportunities. Here's the rise of crypto. Hey, guess what? Stock giving has increased by 136% in this sector over the last 8 years. The average stock gift is $8,000 here in the US, whereas the average online credit card gift to a nonprofit is $128. So you're seeing all of this data that is saying, here's where philanthropy is going, right? It's getting modernized. More of us are comfortable with talking about investing. We're using our own like Wealthfront or Betterment or our own investment platforms, Robinhood. So donors are starting to live in that space. Nonprofits are now being told by all of this research that they need to get into this path, but then the solutions are incredibly difficult or very expensive. And so we were like, hey, we could solve the root of this, right? Which is through brokerage accounts and make that really easy and do a really deep moat because we're a registered investment advisor in a technology company, gives us that fiduciary oversight. So allows us to open these brokerage accounts. And then all of the different things that can come from that is better money market rates, better FDIC coverage, the opportunity to invest or create endowments, the opportunity to receive stock donations. So again, I think it was just a deep understanding of the experience, and then just seeing what a big market it was, right? Because all of us know this listening. If you're in the tech world, it's like, all right, you're going to choose to solve a problem. Ideally, you're spending the next 7 to 10 years solving a problem with a huge market because it's roughly the same amount of work, right? It's the same amount of time. You got to do all of this. So if you're going to go for it, find the biggest market you can and the biggest problem that you can solve, and then really getting the data. Because, right, for us, the IRS, it's all public data. So it was really easy to kind of pull and look at all of those numbers and think, wow, we can tackle this in a unique way. And for us, even though we're fintech, right, we have a proprietary fintech platform. Um, we serve nonprofits, and we chose to do that because we are also very mission driven. Because the idea is that if we can amplify the good work that nonprofits are doing directly in our communities, right, think about the better society and better world that we can create simply by providing them the tools. Because this is an industry where financial stewardship is perhaps the most important. Yet the systems are limiting even that opportunity for them. So we're just
That's
trying to
true.
pull playing fields and hoping that that positive impact in supporting them creates a better place for all of us to live and work and grow.
Yeah, absolutely. This is huge for nonprofits. Uh, Amazing tech, amazing. And do you remember what type of donor behavior kind of showed you that, okay, this was the time to build this right now?
A lot of it has to do with giving trends, right? Where you're looking at what is the kind of awareness of stock giving, what is the awareness of investing, the rise of interest in legacy giving and there's a lot of IRAs and different ways from Roths that you can give philanthropy through your retirement accounts, through legacy accounts. So even where endowments used to just be like, hey, these are only for like huge organizations, that's not true anymore, right? Endowments are a gift that any donor can give once. It gives, ideally recurring support to your favorite organization for decades to come. So how do we start to give a pathway where we can put nonprofits in the pathway of donor intent and donor interest and really start to spread the wealth out so that in the nonprofit and philanthropic world, it's not so top heavy?
Yeah, and can you share with our founders like the initial MVP that you've built out? Do you remember if it was, just a pitch? Was it maybe just a widget that they could, implement on their website, or just like a brokerage link? Like, how did that work?
Yeah, great question. So you mean like the early days, like how we start?
Yeah,
Yeah, I did do 100 customer interviews, so I know it was a little bit of overkill, but I'm also super type A, and I was like, I want to have all the data that I can to be really sure and confident on what we're gonna build. So, bought the URL, the domain, built out a website, got our logo, created a pitch deck and used all of my customer discovery and the research and worked to raise a round of funding because I'm a non-technical founder. And I was like, all right, this is when you're in finance and fintech, there's not a lot of MVPs that you can really test, right? So that's also
yeah,
why really heavy on customer discovery. And our vision is really like a financial operating system. And there's a lot of ways we can grow into retirement accounts and banking and things like that. So we're still, it's not super narrow, but it's fairly narrow compared to what the big vision is. But yeah, we found a co-founder, technical co-founder, CTO, and we started building. And in that, it was like, oh, if I'm going to be a founder of this kind of company, I have to go pass my securities law exam. I didn't even know that early stage. You're like, this is great, and then you're like, oh, I have to go do that. So that first summer, we started building the tech, but raised $500,000 to build it, and started studying for my securities law exam, and just that's really the start of it. And then you launch your first product, which we did more on the investing side. Shortly thereafter, the market tanked. And we got our
oh God,
first check customers, our first paying customers, right? We had our MVP, which again is not just a widget in fintech when you're doing brokerage accounts and you're doing financial transactions and you're doing it for nonprofits, which the KYC and all of that is we have a much higher threshold to meet. Uh,
absolutely.
but yeah,
For those
and
that don't know, KYC, it's know your customer, and
yes,
usually it's intense. You need sometimes even very advanced licenses just to operate these types of
yes.
businesses, and this
We
is
are very
expensive.
compliance heavy, and there's a lot of anti-money laundering, so when you're
Yeah,
serving tax exempt, there again, it's just a very high threshold of fiduciary responsibility that you have, and so that was a long, long process for us to build and launch and get those first customers.
and Karen, can you tell us about the actually initial resistance that happened, the non-believers, the people that thought, okay, this was way too far-fetched, this is not going to work. Did you experience that? And if so, like, what was your way of dealing with that?
Yeah, I mean, we're ultimately it's category creation is what we're doing, so we're not I mean, at the same time, it's not rocket science, right? It's like we are absolutely iterating a very traditional kind of broken system with a deep vertical, right? Vertical SaaS, vertical opportunity, and a moat or made for tax exempt entities. But at the same time, there hasn't been innovation in that space. And so it's this really long journey. And nonprofits are very conservative. They don't want to spend money. They're very risk averse. And they are slow to react to innovation sometimes, rightfully so, right? It's like a lot of work. They have a mission at hand. There's important work to do. So yeah, it's a crazy wild ride when you do a company and you get those first customers. properly embarrassed probably of my early sales pitches, right? Because you get so much
Seriously?
better. Yeah, sure. Like 5 years later, 4 years, like as you grow, you get better at what you do. And so it's fun to think about. But yes, those customers are all still with us today. We have a very technically I'm like, wait, yeah, I don't know if people are watching or hearing, like I'm knocking on wood, but it's we have not had any turn on treasury
Insane.
clients unless their organization has actually shut down. So
Okay.
it's very sticky. They're very happy. We meet them where they are. These days we're at a place where we do demos and we get thanked. Like we're doing
Wow.
sales calls and people are like, I've tried so hard to have somebody else just talk to me, or we've learned more from you guys in just this 30-minute call than we have from our traditional advisor that we've been with for 7 years. Else understands us. You mean you can solve this and this for us? And that as a founder is like this huge gratifying moment that we celebrate every time, and I'm like, "I'm so glad because we started this company to help people like you so that you can, have more equitable access, you can grow, you can steward the funds, you can continue to do your work, you can achieve financial sustainability." And so I think that's what's really exciting and the fact that we just continue to grow and, we're onboarding, 5 plus nonprofits a week, and we don't do outbound sales.
That's
And so it's
amazing.
yeah,
Karen,
it's
just
fun. It's crying
congratulations
right
on
now.
that. It's insane.
Yeah,
Wow. That's so beautiful to see such beautiful growth. I'm so happy to see you succeed, literally. It's amazing because, startups, most of them, within like maybe a year or two, 90% of them give up and just they go belly up,
yeah.
right? And you guys, zero churn. And you got, clients that get onboarded pretty much every week. And that's amazing. I'm so happy that there's just traction. And do you remember, did you like track metrics that signaled you that, okay, there is definitely a tipping point and we're onto something, something's going on? Do you mind sharing like this with the founders listening in?
Yeah, it's, thank you for celebrating our success. It's
Absolutely.
a tough journey, and so we always try to celebrate those milestones, and I think when you look at it, we're like, okay, less than 2% of fintech venture goes to female founders, right? And so I'm like, "Oh, like, okay,
It
great."
shouldn't be that way.
No, it's so don't that's a whole other
Yeah.
podcast we could get into. But when you look at those stats are not in our favor. When you look at we chose to do a mission-driven fintech for-profit company, that's not the odds are not necessarily in that favor. When you look at 90% of nonprofits fail within the first 3 years, we got through that milestone.
Yeah.
How many nonprofits never reach the million in ARR? We get through that milestone, right? So I think
Yeah.
it's and founders, right? And then, but, it's like when you go back to those early days, I'm like, "Oh, yeah, please never do that." And customers, like, when you're fintech and, like, trusting with a risk-averse clientele, like, that's a lot of trust building. It's a lot of stewardship, it's a lot of relationship building, and more than anything, it's persistence. And so as you go and I think there were several times in those first 3 years that we were like, "Is this a thing? Is it gonna work? Like, are we actually solving a problem?" And then, every story's got a pivot, like, we added, cash management, some more fixed income, focused on that. We added a SaaS feature where we started bringing in the donations. And I think as we have for any founder listening, it's so smart to have really strong convictions, but loosely held. So that way you're keeping your vision, you know what you want to solve, but how you're solving it, you're always looking at what are they paying for? What is the feedback? Like, are you getting customers? Are they happy? Even if they're not happy, that's okay. Like, learn from that. And then we're trying to take all of that feedback and iterate and iterate and iterate. And I think now we're at this place where we're like, all right, this is going to be a really great business, a really impactful business. And that's a bit of luck, but it's also a lot of hard work.
I can imagine. Amazing. Just, I'm extremely, extremely happy that this is happening. And we get to witness this. Like, we're actually crystallizing this event on video that this is happening. And, other women that are in tech, they really need to lean in and listen that this is possible. You can do it if you really trust your guts. You just go for it nonstop. There is no stop, absolutely no stopping. And do you remember what was the craziest thing that surprised you the most as you started working with, the nonprofit finance space? What were your biggest realizations there?
Oh, that's a fun question. I think one of the interesting moments we have is we have a custodian, right? So we've integrated with a custodian. So our fintech friends know what that is. Custodian's actually holding the brokerage accounts, right? And our platform is integrating with them. And they still use green screens. And our
No,
team,
no,
and we have really, really good engineers. We have some of the best engineers in the Southeast. I
that's
was bragging on them
crazy.
all day long. My co-founder and CTO Ford is brilliant. And then you have this huge custodian with billions and billions of dollars operating off green screens. And then our engineering team as a startup is then advising them on their product. Uh, and they're good at what they do. We're happy customers of them, but it is this interesting thing when you look at when you are on the front side and you're innovating and you're more agile like we are. They don't have that experience. So when you have such a big company, right, they're focused on just each engineer has one area of specialty and that big vision, and they have to operate within that. It does start to limit innovation. It's what all corporations experience, right? And so it's kind of taking the best of both of those worlds. But I think when you're a startup, you're always like, "Oh, I'm new, we're learning, we're innovating," and, like, you're really confident, but there's always a little piece of you that's like, "Oh, I'm not sure." Like, we're pretending to be sure, but, like, is this gonna work? And just that experience of being like, "Oh, we do know what we're doing." Our engineers are great. We have an amazing A+ team. All of a sudden, now our custodian is consulting with them on different ways to build things, and we're
Wow.
actually building our platform for the ground up with them with a whole new version of kind of what their offering is to help solve a lot of the pain points that we've experienced with them.
And can you share which flows they saw the fast in adoption and why? Like for example, the stock compared to crypto or
Mm.
DAFs or endowment and all that.
Yeah. The heart of what we do is on the treasury side. So
Mm.
we are investment advisors. We do a lot of cash management, investing, endowment creation, things like that, endowment management. So treasury is the heart. What we have found is the SaaS and the donations are really the tip of the spear, where it's like, hey, they have a pain point, they need a brokerage account, they want to receive a stock. Those usually convert in like 2 to 3 days. So it's really quick to get them onboarded. It's really seamless, 30 minutes of their time. We get them up and going in 2, 3 business days.
Nice,
Uh,
that's fast.
yeah, especially when you consider the manual process is usually like 9 to 12 weeks. Ours is six,
Yeah.
and they're
Wow.
just, this is amazing. You mean I can tell
Light
my
speed.
yes in 3 days? And I'm like, you can. We'll have your whole page all customized to you.
My
Everything's ready to
God.
go. So what we're doing is we're making it really easy for all of these nonprofits to really enter into all of these different types of more major gifts. And we're doing it in an affordable way. But then what we're seeing is once they get in and they trust us, that's the tip of the spear. Then it's like, great. Like we just onboarded somebody this week and they're like, great, we're starting here. But in like 2 or 3 weeks, can we have a follow-up meeting to talk about all of our treasury and what's in the banks and management of there? And so we see a lot of cross-sell and upsell in our product and in our services so that we're starting there. And that's the quick and easy. But then the true kind of value gets into the cash management and investments. So we have three revenue streams between a monthly fee, transaction fee, and then an AUM fee, an asset under management fee. And those kind of work together and make our product really sticky.
Oh, this is really cool. And do you mind sharing, with founders listening in, did you use any special adoption vectors, like maybe integrations with QuickBooks or CRMs that made it so that it's really easy to scale faster organically?
Yeah, I will say we haven't really figured out that is a lever of like strategic partnerships that we're still exploring. We have some inbound for that. Yes, we have a QuickBooks integration. Yes, we have a Zapier integration, right? We have all the basics. We're doing an open API for like a custom project right now. So we are offering that when a lot of people want it, but then the question is like if you build it and you spend engineering time, is it requested? Is it solving a pain point? And we've kind of done some tests on that. And long story short is we have a couple. I think in the future, as we continue to mature as a company, we will continue to build those out. But that has not been a focus of our growth strategy at this point. But it's something we'll be growing into shortly.
Yeah, and thank you so much for answering that. Really cool so far as an episode. And I'm just curious, how do you monitor security and compliance across different asset types?
We have a lot of compliance and guidelines in place. It's monitored by the SEC, FINRA, different states. So we live in the compliance world. And so I think, as we mentioned earlier, it's like KYC, there's a lot of AML requirements. So there's a process, even though we make it feel seamless for our clients on the back end, there's a lot of due diligence. We definitely use AI, we use face screening, even though it's an online brokerage account process. They actually use their phone and they scan their face, and we, look at their IDs and have a lot of secondary approvals and requirements. So we live in that. Our goal is to always make really complex things seem really easy and efficient for our nonprofits, and then we handle all the complexities on the back end.
Yeah, and then on that front, also, like, what type of regulatory moat are you currently building against, fraud and for compliance, for example? Because there's so many rules popping in every month. Like, how do you defend yourself?
Yeah. We have a compliance firm, so it's outsourced. We have an in-house compliance officer as well, and there's a lot of guidelines. So there's a lot of regulations that constantly we're doing mock audits. We are going through every checklist that we have to do. We're going above and beyond that. We literally have a page on our website and our footer that's dedicated to our security and compliance. And so it's something that we're very thoughtful and intentional about, because that's the right thing to do and because it's required. And I think that deep moat also comes because for those of you who are less familiar with the, financial world, there's broker dealers, there's banks, like there's a lot of different ways these can look. We chose to register ourselves as a investment advisor, and that as the highest level of compliance. And that means that we're required to be a fiduciary. Fiduciary meaning that we have to hold our clients' interests above our own. And so because we're meeting that threshold, it earns trust with our clients, but it also means that there are a lot of other thresholds on the back end and security wise that we have to ensure we have in place and that we revisit regularly. And again, by mock audits and outside firm, also monitoring that in addition to what we do in-house is really helpful to make sure we have all of our I's dotted and our T's crossed.
Absolutely, this definitely helps. And can you also share with our audience, like, what type of competitive threats keep you up at night, and how are you like countering that? Not being able to sleep at night. Maybe do you like plan something with your team, or how does that go?
There's a lot of things that keep me up at night. That one is not. I think there's a really wide ocean for us. We were first to market in this area, so I will not be shocked if there are people that follow us in this space. And at that point, it's the focus on how much of the market share can we get, how quickly can we get it, and also how happy are our customers. And then to your point, how deep is the moat around us? And there are people in this space who are just like, oh, we have this tech solution, and they're selling the tech solution. But because we went the traditional financial route in the tech solution, that gives us a really deep moat where we are living in compliance and we're handling the funds. But that also allows us to solve the problem at the root. And because of that, it creates a lot of stickiness and a more holistic solution that allows us to then continue to upsell and serve them in different ways.
Yeah, this is great. And for the more technical founders out there, like, for example, you're building a platform. How do you ensure that nothing breaks when you reach like 1,000 organizations on the platform?
It's a good question. This is when you need my co-founder Connor on the call. if you want to deep dive into any of the technical aspects. But yeah, we have a lot of redundancy. We have a lot of high security. We do a lot of testing. So all these best practices we have on hand, and every founder should have a mentor. And so he and I both, have executive coaching or mentorship, and we do that. And he has a very experienced CTO that he meets with every month, right? And so I think we all do that, and then he then helps others who come behind him. I do the same. So I think the beauty of an ecosystem, which the tech community calls it an ecosystem a lot, is that ideally it's a place where all ships can rise together, and that we can really help by making those introductions and helping those who are coming up behind us and paying it forward. I know at least in the Atlanta community, paying it forward is a really key attribute and value that a lot of us have, and it helps that ecosystem be really vibrant and healthy.
Awesome. And also, can you share like the biggest mindset shifts that you had since raising the round?
I think raising funding helps you to cast the next stage of the really big vision you have, right? So it's just more fuel on the flame of like, great, we've achieved these things. Here's the vision. This is going to help us get to the next point that we want to build.
Absolutely. I'm curious, how many no's did you receive when you tried to raise the round? Uh, f-
A lot, a
yeah.
lot. Yeah, let's see. I think I actually Yeah, you resiliency and fundraising, man, that is required. I think I came in a little hot because I came from that world. And so I did have a lot of angel investors. I had a firm that led. Again, when I just raised 500,000, like that first round to be like, let's
Hmm.
build this out. So a lot of that was just on my reputation and my relationships. But even then, I had people that I had known for a decade in the industry that were like, "No, we really like you, Karen, like, best wishes, but
Ah,
we did."
seriously?
Oh, absolutely. So even though I feel like we had a little bit of a leg up, with a lot of relational equity I had in the ecosystem, I knew and respected who I
Well,
thought for sure would give us funding, and they didn't. And that's not personal, right? They still
yeah,
gave up their time, you have to have alignment in that, and I understood that. For any VCs listening, no's are okay, but a thoughtful response and a short explanation on why the no is so helpful for the founder. So it's not just
gold.
don't
Yeah.
ghost them, like, don't just give them the kind no and a 1 or 2 bullet point on, like, here's why. And what we ran into a lot, particularly in early funding, is that those VCs did not understand the nonprofit community and that sector and industry. They were just like, "What do you like?" Because often VCs are high wealth, and they're like, "Oh, I have a donor advised fund. What do you mean? It's great. Everything's great. Everything's open to me." Right? And it's a very different perspective. And so for us, it was really finding alignment with investors who were more familiar with this space, or were open to learning that the problem was a true problem with a huge market and an opportunity to solve it.
And do you remember approximately how many no's did you actually get through to finally see the funds hit your bank account?
I don't remember the early round because that was just small. I feel like we have turned down some funding opportunities, but I think when I had a spreadsheet, this is not exact, but ballpark numbers, I had at least probably 65 no's, 65, 70 no's.
I'm doing a bit of math here, right? So I
Yeah,
divided
and
2
seeing
million.
how many were on yeah, so it's you just you spread the net really wide, and there were people again that we got term sheets for, but we were like, "That was not a good fit," or they were dirty terms, or we just didn't like the people as much, and so just I think it's better to not have funding and to stay really lean than it is to get funding with the wrong partners. Um
Dropping a gold bomb right there. Absolutely.
And
Absolutely.
funding is like a vanity metric, like, you have to have like, but it's that doesn't mean it's a nice to have, don't get me wrong, and we have some really great investors, and we feel privileged to kinda have the backing to continue to grow, our company, but at the same time, like, if you don't get paying customers or you don't get happy customers, right? Like the best way to fund your company is that way. And so then the funding comes after that. And it's such a brutal cycle and kind of journey to get there. But I think that's where it's empowering. And now that we're on the other side of that, and we're still a young company, right? But we have a lot of inbound. And then the power differential starts to shift, and that's fun too, where you're like, "Oh, you wanna talk to me? This is fun." Like, 2 years ago, these people would have never returned my email, right? And so it's an element of, again, just getting alignment. But yeah, lots of no's to get to the yeses. And I have some founders who are friends who are brilliant, working on amazing, and they have like 100 no's, right? Occasionally you get like people on the West Coast where money goes a little bit and they're like, "What do you mean? I only got like 20 no's." And so like there's a lot of variables, but I think those the outliers. Knowing that you're gonna get dozens and dozens of no's is just part of the process.
Absolutely. Each no, I did a little bit of math here, and it rounded itself up to approximately 30K. So it's rather profitable to get a no. Still, it's a nice little check of 30K to get for every no. So that's all good.
Yeah.
Um,
Yeah.
yeah, and I know that you're definitely short on time on your side. So I do have still really really cool questions for you. So number one, do you remember how did you celebrate when you actually got the funding, or did you even celebrate at all?
I am notoriously bad at celebrating milestones. And most founders probably are because it's like this beautiful moment where you go like, "Oh, you worked so hard and you got it." But it's like as soon as you get there, your brain is already on to the next thing of like, "Great, now we got funding, which means now we have to meet these metrics and we have to grow at this rate and then produce this outcome." Right? And it just the pressure and what it looks like just evolves. And so I know a lot of the advice that I have gotten over the years is just, "Karen, will you pause and just think about where you were a year ago, where you were 3 years ago? You hit this milestone." And so I think, like, the very first, I probably bought myself a burrito at Chipotle. And I remember I had
Yeah,
the
that's
company
amazing.
MX and, like, my co-founder and I, we were like, "We're gonna buy ourselves a $10 Chipotle meal." Uh and honestly, that was our probably the limit of our celebration, and then it was like, "Great, on to the next," because it's just, like, one more important step in, like, the building journey. But, yeah, I think, and the bigger your team gets, then it's about culture building, and it's about celebrating them and what we're building collectively, and then making sure that they also have those opportunities. So when you're a lean founding team, it's kinda like, "Great, Chipotle will do." As you grow and you're building community and culture with a really A+ team, I think that's where more overt moments of celebration are more important.
Yeah, absolutely. It's very humble of you, by the way. Yeah, it's really cool to it's refreshing to see this type of behavior founders that succeed. It's amazing. And I'm just curious, before we go, do you have three top advices that you could share with the founders that you've learned so far in your journey that were really brutal for you as lessons so far?
I hope everybody knows that you do not prep us with these questions before you
I do not. This is
and I'm
completely
like, "Oh,
random.
let's come up with 3 nuggets, off the top of my head." Uh, I it's the no's are a necessary path to success. Everybody gets no's. And so that resiliency and taking productive feedback from the no's, it doesn't mean they're right, but being open and listening, I think is really important. So no's suck. They're not fun, but they are always on the path to success. And I would say have strong convictions loosely held. Always make sure that, yes, you have the vision, you're building, you're going, but, like, you probably need to pivot. Most successful startups pivot. You have to listen to your customers. You have to stay to those customers. I didn't No one else on our team closed a sales deal until I closed our first 100 customers. It's a little
Wow.
extra. Again, I'm a little extra sometimes, like, on my day, but we were very lean and we were very slow to hire, and we had other teammates, of course, but I was like, I really wanted to do founder sales as long as I could to learn, to continue to learn and be able to solve those problems. So that would probably be the second one, strong convictions, loosely held. And probably the last one I've been leaning into lately is that pressure is a privilege. And it's, we all live with it, and especially as a founder, like there's so much pressure. If you get funding, there's a pressure. If you have customers, it's a pressure, right? If you have product, when it breaks, that's pressure. Is pressure to make everything, work
Yeah.
and serve. And so the beauty of reminding yourself is that if you didn't have customers, right, then you wouldn't have those problems, but then you wouldn't have a company. If you didn't have investors like that, you could look at it, like, oh God, now I have to do this, and I have to do another board deck, and I have to answer about these metrics. But at the same time, what a privilege it is to be able to have these questions and to be able to be building something that people love so much that when it breaks, it's like a big deal. Right? Like it's so that pressure that you feel, just remind yourself that it's ultimately a privilege because it shows that you're doing the work and you're growing something great.
Every answer you're giving, it literally generates 10 extra questions in my head.
I'll give you a couple, one or two more if you want.
Right. I do have one last question. So
Yeah, let's do
if
it.
if you were to whisper to yourself something when you were building your company at day one, what would it be?
If I were to whisper something to myself, you said day one,
Yep. Something that you know right now that you would completely, absolutely use from day one.
that you are capable of being a great CEO.
Ah.
I
I
wish
hope.
more people believe that, and I think imposter syndrome is real. Please know that underneath that confident sounding statement, lots of imposter syndrome, lots of uncertainty, uh, but really a passion to do good work and to do it with excellence and to grow an A+ team. And I think having a voice, just saying, speaking that over any of us, having a voice that speaks confidence and belief in you from the beginning throughout is so important. And so I would just say that, you can do it and you have the ability to be great at it.
Absolutely, Karen. I really think we need to document way more success stories like yours. They're phenomenal, literally. Very, very happy to see you succeed. And if potential investors or clients want to reach out, what's the best way of doing so?
Sure. You can find us at infinitegiving.com. My email is Karen@infinitegiving.com. Please don't email me to sell me stuff. I'd be happy to, speak with you or connect you to someone on our team who could help.
Absolutely, absolutely. Well, thank you so much for joining us for this amazing Finums episode. Very, very glad and lucky to have you here. And to everyone listening in, if you liked this episode, feel free to hit that like button. Of course, subscribe and hit that bell button too. Would really appreciate that. All right. See you in the next one. Cheers.
All right. Thanks.